The first type of source document for cash transactions that we'll need is cash receipts. So we're going to do 4 types of source documents for cash, and we'll start with this one. So a cash receipt is issued by the business when it receives cash from another entity. And the best thing about this one is that we've all received receipts as customers. So all we've got to do is sort of reverse the logic to apply it to the business. So let's pretend our business is called Cool Cardigans. We've got cash receipt A here. It issued this cash receipt source document to a customer, and the business applies a markup of 100% on all sales of inventory. So usually, and particularly in our subject, the name of the seller or issuer will always be at the top of the source document. So there's our name there. What we can't see is a customer name on here. And when you think about it, that makes sense because when you go into a shop and pay cash, they don't know who you are necessarily. And when you get the receipt, it doesn't have your name on it. And that's what's happened here. So what happened in this transaction? Well, we're Cool Cardigans. So we've sold here. We can see 2 cardigans and blue cardigans, 1 green cardigan, and the total comes to $250. So that is a cash sale of inventory for $250. There's $25 GST, so we've therefore received $275. Now the name of the customer is unknown because it's a cash sale, and when you, like we said, you get a receipt in the shop, they don't know who you are. And the cost of sale is $125. Now, we've just got to remember, in the real world, when we go shopping and buy stuff, the shop doesn't tell us the cost of sale. They don't want us to know that. So what we'll have to do here is we can never tell that from the actual cash receipt what the cost of sale was. We have to be given that. And it says here the markup is 100%. So that's how we get a cost of sale of $125. And the source document that we're going to refer to record all this is receipt 452. And we can see that there. We can also see this is a tax invoice. That doesn't mean it's a credit transaction. Remember, tax invoice just means it's a transaction that involves GST. And we can see that there for $25. So how would we record this in the general journal? Well, with the sale, 5 things happen, and you can do them in any order, but we always start with the date. I'm going to start with the debits, but you can start with the credits if you wish. The first thing is we're going to get money, cash, which is an asset. So if you call that bank, that's okay. I call it cash. The main thing is it's an asset, and it's going up, and we're going to get $275. And the rules of debits and credits over here say that when an asset goes up, that should be a debit. So we've got that there. Every debit needs a credit, and we'll start with the sale portion of this transaction, which is a revenue. And when a revenue goes up, that will be a credit. And it would be $250 because that is the total of the actual sale. So that's the bit that the business has earned. What we haven't earned is this GST $25 here. So that goes into our GST clearing liability because it's not our money. We've got it, but we are obligated to give it to the government. So therefore that's a liability. And when a liability goes up, the rule says that should be a credit there. And for looking at the transaction, we look like we're done. We've processed all the information actually on the receipt, but remember, there's always a cost of sale, and that won't be on the receipt because businesses don't want us to know that. So in this case, the cost of sale was $125. That's an expense, and it's going up. The rule says an expense going up will be a debit. And to make this sale, we had to sacrifice inventory. We had to decrease the amount of inventory we have, and that's an asset, and it's decreasing, so that would be a credit. And we are done. That's all 5 things that are involved in a sale. Remember, with the general journal, we might be asked for a narration, so we'll just say cash sale of inventory. So we describe what happened very concisely, but we can also see the document number. You've got to have that document number in there. So we've written receipt 452. If you wrote cash receipt 452, that's fine as well. So that's probably the most common type of cash receipt a business will have, selling stuff, but we better look at some others that might pop up. We can not only issue cash receipts, but in this case, we're Cool Cardigans. What have we received a cash receipt? So we can see here, this is for cash receipt B. The name of the seller or issuer is Fancy Cardigan Wholesalers. There's their details. And our name is here. So usually in our subject, we'll say the seller's name or the issuer of the documents at the top, and the buyer or the receiver of the goods in this case is usually here. And we can see we bought a whole bunch of stuff, and these are all cardigans. So if we're Cool Cardigans and we're buying from Fancy Cardigan Wholesalers and we bought a bunch of cardigans, that's probably going to be inventory. So what happened? Cool Cardigans made a cash purchase of inventory for $2,600 plus $260 GST, and we can see that here. The subtotal says $2,600, the GST says $260. That's a total of $2,860, and I know this has been paid because I can see it says here amount paid negative $260, and the total owing is nil. And the source document here is receipt FCW 109. How would we put this in the general journal? So for cash receipt B, we're not selling, we're buying. So what we'll say is this total subtotal here of 2600 represents inventory. We'll start with the date. We got that here. So the inventory, which is an asset, we're getting more inventory, so that will go up. So that will be a debit. In this case, we're the ones that are paying GST. So what that does is it decreases our GST clearing liability. So the liability is going to decrease, so that when a liability decreases, that would be a debit. And the offsetting entry there, the credit entry, will be to cash or bank, whatever you want to call it. We had to pay money. We paid a total of 2600 plus 260. You can see that here. It says total 2860. So that would make your asset go down. So that would be a credit there. Brief narration, purchased inventory from Fancy Cardigan Wholesalers, and we've got receipt number FCW-109. Do we need to put every single item that we bought in the narration? Absolutely not. That's not the point of a narration. The point is that we can refer to this document if we ever need it, and we can find the inventory we bought here. So they're kind of obvious cash receipts where we can see quite clearly what happened, but then we might get something like this one. So Cool Cardigans issued this cash receipt source document for cash receipt C, so we can see our name at the top. What we can see here is we've got receipt 555, we've got a date, and that's our ABN, and it says here receipt from C. Kramer for 330. Well, what's that for? Well, we need to read the document, and the document says that is for payment of invoice 5B. So what happened in this transaction? Well, it looks like, from what we can tell, Cool Cardigans received 330 from C. Kramer to pay invoice 5B, and we received the money on the 10th of February. The source document was receipt 555, so that's what we can see. What we need to infer, though, is with this must be someone paying us back, because it says he's repaying invoice 5B. So previously, Cool Cardigans made a credit sale to C. Kramer for $300 plus $30 GST, and the cost of sale will be $150 because we know our markup's 100%, and now he is paying his account. So essentially, we're just going to deal with an account receivable paying us money back. So how would we put that in the general journal? Let's start with the date. So it says the 10th of February. We've received cash, so that must mean the cash asset's going up. So that will be a debit, and it's going to go up by 330. Well, every debit needs a credit, so what goes down? Well, the amount of accounts receivable, the amount that customers owe us, will go down once C. Kramer pays us back. So we'll reference the accounts receivable C. Kramer. That's an asset going down, so that will be a credit. Now remember, do not process GST on this, because we learned earlier in the course that means we'd be double counting GST. We already recorded GST at the time of the sale, so we don't record it again because we'd be double counting. We'll just do a brief narration. C. Kramer paid invoice 5B, and the main thing is we've got that document number there if we ever need to refer to it, receipt 555. Let's just deal with one more, cash receipt. This is probably a one that's a little harder to interpret. What have we as a business got this cash receipt? So we can see our name at the top. You can see it says here like the buyer or the receiver, in this case it says Elaine Bennis, right? And it says $10,000, but just looking at that we can't really tell what this is for. So the receipt has a description. It says being for a capital contribution. So Elaine Bennis must be the owner of this business. So what just happened in this transaction? Well, the owner of Cool Cardigans, Elaine, made a capital contribution of $10,000 cash on the 27th of February. You can see the date. And the receipt, the source document was receipt 621. Why would we need a source document when the owner makes a capital contribution? Like, we'd already know about the money, right? And just remember, this goes back to the accounting entity assumption, which says the business and the owner are separate entities. So therefore, any transaction that occurs between them still requires a source document to verify it. And because remember, the owner is not the business. They are separate entities. So we still issue this document, and in this case, the receipt verifies that the owner made a capital contribution of $10,000. So now we're going to record that in the General Journal of Cool Cardigans, cash receipt D. What would that look like? We'll start with the date, the 27th of February. What would happen is the business got more money. So we're not doing this for the owner, Elaine. We're doing this for the business, Cool Cardigans. So the business has received money. So that must be an asset which is increasing. So the rule says to make a debit. What is the matching credit? It is capital. The owner's capital goes up. So when owner's equity goes up, that would be a credit. And that's all that's happened here. So we just need to always finish with a narration. So we'll say capital contribution made by owner, and we've got receipt 621. And just because it was a transaction between the owner and the business doesn't mean there shouldn't be a source document for the transaction. There should be a source document for every transaction, and we just record it like we would any other transaction in the general journal of the business.